higher on the heels of its first quarter earnings results, beating analyst estimates. The company's chief executive officer, Scott Kirby, took the unusual step of providing two sets of guidance today, warning that a recession could cut profit in half at the airline. To help us break down the numbers and in particular the guidance, let's bring in Nicolas Owens. He's equity analyst who covers industrials at Morningstar Research, and he joins me now from Chicago. Nicolas, thanks a great deal. I spoke with a veteran portfolio manager, a guy who's been managing client money for more than 40 years. He said he had never seen a company issue two sets of guidance before, as United has done. Tell us about that part of the company's release.
Thanks for having me, Paul. Well, my guess is they looked at the way people reacted to Delta suspending guidance, and so they thought, well, let's try to do something a little different. And it makes a whole lot of sense given that the concern around recession that's on a lot of people's minds is one of a possible recession and an uncertain timing if it happens. And so as a equity analyst who does a lot of forecasting and uses discounted cash flow models, I really appreciate the idea of two scenarios to look at rather than if they had split the difference, no one would have been happy with their forecast.
How good does the upside forecast look like? It seems to be the forecast that the market is investing on today, trading on today.
The upside forecast is actually a little bit of pared back from, let's say, what they expected going into the year. So everyone's talking about a bit of softness in some of the bookings, and especially on the leisure side or sort of the economy fares in the last several weeks. And so they've pared back some of their full year expectations from what they had been saying, let's say, last winter. But within that, it's still pretty good. And then they offer this alternative of a recession with, say, 5% less revenue. And what's notable about what United is saying is they're saying that they'd still expect to be reasonably profitable in that scenario, which is a good sign for their successful segmentation strategy.
You made the point in some recent commentary, a note to clients that airline stocks tend to exhibit above average volatility and sensitivity to stock market movements. That sounds like these stocks could be very, very volatile right now. Is that one of your cautions to investors?
Absolutely. I would caution that, let's say, in almost any environment, the small changes to an airline's operations or even small changes in the forward price of fuel and things like that can ripple through quite quickly to their bottom line. And thus, the stocks that trade on, the expectations of those profits move around a lot. I mean, if you look at a recent chart of United, it was trading over $115 something recently. And not all that much has changed, in my view, of what the forecast for the company has been. So that's just something to keep in mind. Again, looking at this from a long-term cash flow modeling point of view, it's quite remarkable how small changes in assumptions like what their average revenue per seat might be spill into their profitability.
And you, in the same vein, you've increased the Morningstar uncertainty rating on Delta, United, American, and Southwest Airlines to very high, from high to very high, to account for a wider spread of likely outcomes. How should investors interpret that in terms of the wisdom of buying these stocks on dips, for instance?
Well, the effect of that is simply that if you were inclined to buy an airline on a dip, I would say you should wait for a deeper dip. That's what the impact of our uncertainty rating is. That is to say, we wouldn't put a 4 or 5 star rating on it until it traded a bit lower against the fair value. And also, I publish a single fair value, not a range. So that is another way for us to account for exactly what we were saying a minute ago, the possibility of a recession materializing and in uncertain, let's say, magnitude and timing.
What does history tell us about recessions and the willingness of consumers to get out and purchase air tickets?
Oh, well, it's a little interesting in that in a 20-year data set that I have, in front of me every day, there are very few, let's call them plain vanilla or regular recessions to study. You have things like the crash after 9/11, you have the great financial crisis, you have COVID. I've thought for a while that we were due for just a plain Jane recession, and it may or may not be that but the one that may or may not be triggered by this tariff war is something more like that. And so, people will travel. Some corporate travel will be cut. It's in some cases, a sort of a discretionary expense that companies will pull back, and people simply be more price sensitive potentially, or just plan less in advance, et cetera. So, and that's the talk that you're hearing now in terms of softening advanced bookings in some markets and so forth. It's not that people won't travel. The deeper the recession, you might see some dips in actual passenger volume, but it's really about how much are people willing to pay.
You think United Airlines shares are substantially overvalued. We'll take another look at the stock. It's in the 60s US. You think fair value on this is $39 US. You think this stock is overvalued by $30 US per share?
Yeah, and I think I'd like to contextualize that a little bit. It's not that I don't think they've done a great job segmenting and that they don't have actually a profitable future in front of them. It's just a matter of what do you believe will be essentially going in perpetuity. And so if you're trading this stock on some multiple of earnings, you're making actually implicit assumptions about the very long term. In my cash flow model, I'm able to make explicit assumptions. And so I look at a pretty good stable market share and profit share for United from the industry. It just doesn't add up to $60, $70 per share.
Are there any stocks in the group that you like right now that you think are undervalued?
I can't say that I do.
Nicolas, thank you very much for your candid views. That's Nicolas Owens. He is the equity analyst covering